Hello viewers, welcome to my channel. I'm Hashim. So now I'm continuing the problems on irrecoverable debt. Last video I have completed 12 short questions and MCQs on irrecoverable debt. Before that I have made one video completely theory on irrecoverable debt. Hope my regular viewers have already watched those two videos. Now you are more comfortable on this topic of irrecoverable debt. In this video, I'm going to finish off all the problems, short questions and MCQs. So watch the video till the end to get the complete command on the subject of irrecoverable debt. Before starting, I expect from my viewers a printout of the problems which I have given in the link under my description. So without having the problems list, you cannot be able to understand the solutions, explanation. So before starting, always keep ready the problems which I have given in the link under my description. Take a screenshot of the solutions of these problems from the board. Then I'll explain each and every point in detail. Come on. Now I'm going to start the 13th problem. 12 problems I've completed in the last video. See the 13th one. Define the term receivable. Short question. Define the term receivable. Receivables means the amount due from the credit customers. Receivables means the amount which is due, the money which is due from the credit customer. That is called receivable. So you can say money owed to the business. Money due or owed from the to the business by the credit customer. That means the amount is due to the business from the credit customer. That is called receivable. Second one, 14th problem. In which ledger would you find the irrecoverable debts account? Irrecoverable debts account will be opened in which ledger? It will be opened in the nominal ledger, general ledger. It is called nominal ledger or it will be called general ledger. Both means same. Next one, 15th one. Which accounting concept is met by the use of an allowance for irrecoverable debt? We make the provision or allowance for irrecoverable debt following which accounting concept? The accounting concept prudence. By following the prudence accounting concept, we make the provision for irrecoverable debt. The prudence concept says the money, the income should not be overstated. That's why we provide this irrecoverable debt. Next one, 16th. Why would a business use an allowance for irrecoverable debt? Why a business will make the provision for irrecoverable debt? If the provision for irrecoverable debt is not made, then definitely the profit will be overstated. The financial statements will not show a true and fair view. In order to present a true and fair view, we have to provide irrecoverable debts. So here, if there is a decrease, so that it does not overstate its profit. It does not overstate its profit and shows a true and fair view in the financial statements. That means the receivables should show a true and fair view. Otherwise, if we do not provide irrecoverable debt, then trade receivables will show more, will show excessive amount. It will not show the true and fair view. That's why we have to provide allowance for irrecoverable debt. Then 17th, what is the effect of the decrease in the allowance for irrecoverable debt? Already in the last video I have explained. If there is a decrease in the allowance for irrecoverable debt, we have to add the decrease to the gross profit. The profit will increase. So whenever the allowance for irrecoverable debt decreased at the end of the year, the amount through which it is decreased, that amount will be added to gross profit. If there is a decrease in the allowance for irrecoverable debt, it will be added to gross profit in the income statement. Next one. What is the effect of increase in the allowance for irrecoverable debt? We compare the allowance for irrecoverable debt at the beginning and end. If at the end of the year it has increased, if it is increased, the amount of increase should be taken under expenses in the income statement. The two rules you have to remember. If the closing allowance increases, the amount should be taken in expenses. If the closing allowance decreases, the amount should be added to gross profit. That's it. Next one, 19th. What is the effect of irrecoverable debt which was written off? It was now recovered. Earlier, the irrecoverable debts was written off. Now it is recovered. When the irrecoverable debt is recovered, that amount will be added to gross profit. Irrecoverable debt recovered will be added to gross profit. So here, a debt that has been written off and then recovered will be added to gross profit in the income statement. Next, 20th. Problem number 20. What is the effect of irrecoverable debt? The effect of irrecoverable debt is the profit will get reduced and trade receivables will get reduced. That is the effect. So first of all, we'll explain trade receivables who will definitely not pay their debts are called irrecoverable debt. The trade receivable which definitely they will not pay. Definitely they will not pay. That amount is called irrecoverable debt and written off and recorded in the income statement under expenses. So if an amount has become irrecoverable, it will be written off and that amount will be taken under expenses in the income statement. Now 21st problem is MCQ. Four options are given. In which book of original entry are irrecoverable debt recorded? In which book of original entry the irrecoverable debt will be recorded? So remember, the irrecoverable debt will be recorded in the book of original entry called journal. There are different books of original entry like sales day book, purchase day book, sales return day book, purchase return day book, cash book, petty cash book, and last one journal. Journal. So this written off, irrecoverable debt written off will be recorded in journal. So answer is B. The irrecoverable debt is recorded in the book of original entry journal. That's it. Now 22nd. 22nd is again MCQ. Ken Leun has an allowance for irrecoverable debt at 7% of receivables. The businessman Ken Leun, he is keeping an allowance for irrecoverable debt at 7%. Last year's allowance was Hong Kong dollar HK, Hong Kong dollar 3,280. Last year means beginning of the current year. Last year closing allowance will become current year's opening allowance. The beginning of the year Hong Kong dollar 3280. His receivables this year are Hong Kong dollar 35,000. So end of the year the trade receivables are 35,000. What impact on the profit for last year would this year allowance make? What is the impact of allowance on the profit of the current year? The profit will get changed because whenever there is change in allowance, it will change the profit. If the allowance increased, the profit decreases. If the allowance decreases, profit increases. So there is inverse relationship between allowance and profit. So it is asking you what is the effect on profit of the current year. So we compare what is the allowance beginning of the year, what is the allowance at the end of the year. So beginning of the year allowance 3280. End of the year allowance we have to calculate. Answer is B. We'll see how we got the B. Allowance for irrecoverable at the beginning of the year Hong Kong dollar 3280. Now allowance for irrecoverable debt at the end of the year 35,000 into 7 by 100 2450. Now compare beginning and ending. Beginning of the year 3,240 was the allowance. End of the year the allowance has come down to 2450. There is decrease in allowance from 3,280 to 2,450. When there is decrease in allowance, the profit will increase. So the allowance has decreased by Hong Kong dollar 830. 3,280 minus 2,450. You will get to $830. So our profit will increase by $830. When allowance decreases, the profit increases by Hong Kong dollar 830. That's it. 22nd over. Now 23rd, again we have MCQ. A business has made a gross profit of 3,45,218 and a profit for the year 23,987. The gross profit and profit made during the year is given. Trade receivables amounted to 45,123 before irrecoverable debt of 752 has been written off. That means end of the year the trade receivables are 45,123. But this trade receivable is before writing off the bad irrecoverable debt. So we'll deduct 752 will be deducted from 45,123. In the previous video also I have explained you the allowance will be created after deducting irrecoverable debt. So first you deduct irrecoverable debt, then you calculate the allowance for irrecoverable debt. So here 752 should be deducted. An allowance for irrecoverable debt of 5% is required. Which is the correct entry for allowance for irrecoverable debt? So A, B, C, D, 4 answers are given. The B answer is correct, 2218.55. 2218.55, this is the correct answer. Where is it? Here. B answer. How we got this 2218.55? I am showing the calculations. Trade receivable at the end of the year 45,123. From this we deduct irrecoverable debt. Deduct irrecoverable debt 752. Written off. So 44,351. 44,371. These are the trade receivable after writing off irrecoverable debt. On this amount we have to calculate the allowance. So here allowance for irrecoverable debt at the end of the year 44,371 into 5 by 100. 2218.55. The allowance at the end of the year is 2218.55. Allowance for the irrecoverable debt at the end of the year. That's it. Now 24th. Zafar owed Ali. Zafar owed Ali. That means Zafar has to pay to Ali. Ali has to get the money from Zafar. Zafar is the credit customer. Zafar was only able to pay $200. Actually, amount due from Zafar is $500. But Zafar is paying only $200. Ali wrote the balance off as irrecoverable debt. Out of $500 due from Zafar, Zafar is paying only $200. Remaining $300, Ali want to write it off as irrecoverable debt. Ali will say that we will not recover $300 from Zafar, so we will write off. The total amount due from Zafar is 500. Which entry record this in Ali's ledger? So we are recording the journal entry in Ali's ledger. So what is the entry? Ali will pass. The 4 options are given. The answer is C. So how we got C? I am explaining here. Answer is C. Books of Ali. Entry on receiving $200 and writing of $300 as irrecoverable debt from Zafar is. From Zafar, Ali is getting $200. Remaining $300, Ali is writing off as irrecoverable debt. So first of all, money is coming. So when cash comes in, cash should be debited. Here Ali is getting $200. Ali is getting $200 from Zafar. So bank account debit. Bank account debit 200. How much amount he is not receiving irrecoverable debt? 300. Out of 500, 200 received. So remaining 300 irrecoverable debt. And irrecoverable debt should be debited. So bank account debit 200, irrecoverable debt debit 300. Zafar account credit 500. Who is the giver? Who is giving this money? Zafar. And how much actually we have to receive from Zafar? 500. So Zafar account should be created by 500. So debit 500, credit 500. That's it. So answer is C. Next, 25th problem. A trader sold goods to Anna on credit. Anna is a credit customer. A trader sold goods to Anna. Anna failed to pay the amount owing, and this was written off as irrecoverable debt. Which entry will the trader make to write off the irrecoverable debt? Already so many problems we have seen. What is the entry for writing off as irrecoverable debt? Irrecoverable debt is a loss. It should be debited. Irrecoverable debt is a loss, so it should be debited. So irrecoverable debt, debit. And which account is created? The credit customer. Who is the credit customer? Anna. Anna is the credit customer. So Anna's account should be created. So entry will be irrecoverable debt, debit, Anna, credit. Answer is C. Journal entry for writing off irrecoverable debt from Anna is irrecoverable debit, Anna, credit. That's it. Now last and final question on this MCQs and short questions. David owes $1,000 to Parvinder. David owes, that means David have to pay to Parvinder. The business is of Parvinder and the credit customer is David. From David, $1,000 are due. He pays 90% of the debt. David pays 90% of the debt. Parvinder writes off remaining debt. 90% he has paid, so 10% he has not paid. The total amount due is 1,000. 10% of 1,000 is 100. So $100 is irrecoverable. $100 is irrecoverable. Now, what entry will Parvinder make to write off the irrecoverable debt? Just now we have seen what is the entry for irrecoverable debt. Irrecoverable debt debit, David credit. Who is the credit customer? Credit customer should be credited. David should be credited. So entry irrecoverable debt debit, David credit. Amount is $100. How 100? 90% he paid. 10% he has not paid. So 1000 into 10% is 100. You can see answer is A. Irrecoverable debt 100 and David 100. So here books of Parvinder, amount due from David is $1,000. He pays 90%, therefore 10% he does not pay. So irrecoverable debt is 1000 into 10 by 100, 100. So entry for writing of irrecoverable debt debit 100, David account credit 100. That's it. So totally 26 short questions and MCQs I have explained. So if you watched the complete video, definitely with confidence you can write the examination. The only thing, you must have the patience to listen, to see, and always keep a printout of the problems ready before watching this video. Then only you can get the complete command. Otherwise, simply listening and watching, that means you will not get the command on the subject. So just to follow my instructions, my advices, definitely you will get a lot from this channel. Inshallah, next video I'll start the main problems on irrecoverable debt.